Okay, guys, it is festive season. It is the last 2 days of the year. So I'm guessing a lot of people are traveling and enjoying their holidays. We're going to talk to some hotel companies now. Lemon Tree, in fact, has formed a JV with a private equity firm, Warburg Pincus, to focus on a new segment, a new genre called co-living. Lemon Tree has a 30% stake in this JV with a planned investment of 3,000 crores over 7 years. To find out what the revenue generation this would mean, what exactly is co-living, Patanjali Keswani, the chairman and managing director of Lemon Tree Hotels, joins us now. Mr. Keswani, thanks so much for joining in. Tell us a little bit about your JV with Warburg Pincus. What kind of growth plans, what is the expected investment, and what kind of revenue outlook do you have?
The board has approved a joint venture with Warburg Pincus, which is also, of course, a very large private equity firm out of the US, and our earlier investors with us in Lemon Tree Hotels. Now, this joint venture is focused on the co-living space in India, which is really, it is focused on millennials, people under the age of 35. One of the subsets we are looking at is student housing. I don't know if how many of your viewers are aware of the fact that there are 35 million students in India in college and obviously postgrads. And most of them do not have accommodation on campus. So what we are looking at is actually focusing on this segment and providing a standardized, high quality student accommodation product across India. We are also looking at young urban professionals who, for whom rentals and even capital costs for housing are very high in the large cities of India, and therefore providing co-living spaces for them. Co-living really means that you will get a room to live in, and you will have common shared facilities which are like where you meet and you socialize and where you eat, common kitchens and so on and so forth. So this new joint venture, which was, as I said, approved by our board yesterday, envisages equity investment over the next 7 years of about 3,000 crores. And we plan to build, our target is to build 100,000 beds in India within that time period.
Okay, that sounds like a great idea, and I think a niche market which for the first time we hear hotels trying to cater to. Now, coming back to your numbers, you will be investing 3,000 crore for this project, or is the total investment 3,000 crore? What's your stake in the JV?
No, this is the total equity. The majority stake is with Warburg Pincus. We are taking a significant minority stake, and this will be invested over time. So I want to be very clear, it's not an immediate equity investment, it will be an equity investment over the next 7 years.
Okay, so what do you mean
and it is up to 3,000 crores.
Up to 3,000 crores, got that. What do you mean by significant minority?
It means Lemon Tree will have 30% ownership in this.
In the JV, all right. So Lemon Tree owns 30% in the JV. But what is your expansion plan? I mean, what is the expected revenue that you're looking at from this new co-living segment that you're entering into?
So our broad view is the following. We are looking at initially two levels of, 2 points of this business model. The first is greenfield build to suit, which will be highly efficient and will obviously give higher yields. The second option, which is a capital light option, is taking and repurposing existing buildings on long lease and converting them into student housing and or co-living. Typically in India today, the average rental that young people pay is anywhere from 12 to 18,000 rupees per month. So if you take a midpoint, 15,000 rupees, and I'm speaking very loudly, as of today, 15,000 rupees into, say, a 400-bed, building, or a 1,000-bed building would be the equivalent of, 10 to 20 crores of revenue, with a very significant portion of that being operating profit, because this is basically mostly a fixed cost business. So we are evaluating, we've done a detailed study, we are evaluating the business model. Obviously, from our perspective, we would like to go as capital light as possible. So the more exciting option for us is to take buildings on lease from distressed real estate developers or other owners of assets, and invest in upgrading it to our brand standards, and then simply looking for young people to stay there.
Okay. No, Mr. Keswani, I completely take your point. I can tell you how much, I can't tell you how much your thoughts are going to reverberate in our own office. We have a lot of young people, so speak of the millennial generation and catering to them. Okay, now therefore by year one, say end of FY20, how many rooms do you expect to have completed?
See, we are conservative by nature, both Warburg Pincus and Lemon Tree. So it is not a question of throwing capital at a new business model and then saying, you know, we'll find a way out. We will be conservative in the first year. So my estimate is that I don't want to, you know, talk about 10,000 beds or 20,000 beds. Maybe we will only do 2,000 beds. We will make sure that we iterate this in such a way that the business model gives us a minimum yield of 14 or 15%. Once we get there, then we will look at very rapid national expansion. But to go back to your earlier point, the business model is quite clearly defined. We have been talking to a number of people who own buildings or operate universities, and we think that we should have quite a few projects on ground, preferably capital light, in the next 6 months.
Okay, well, that's good to hear. Finally, if you can just comment on what the debt repayment plans are of the company. Does it kick off in FY20?
No, our debt at peak is this year, because we are opening a whole bunch of hotels which will get operationalized. In fact, in the next 45 days, we will be opening our large hotel in Bombay, which will be a big cash cow for us. So this debt, you see, as the hotels operationalize, they will start servicing this debt. So our expectation is, on a consolidated basis, excluding any investment we make in, you know, in any new opportunities, our debt should be, we should be debt-free by FY22-23, excluding any additional investments we make.
Oh, right. Okay, got that. Mr. Keswani, pleasure speaking with you. Thank you very much and all the very best for this very interesting venture, which I'm sure is going to be taken advantage of by the millennial generation. So many young people changing cities and looking for homes. I mean, we've never really planned for PG accommodation.
Yes, yeah.
This is, you know, absolutely the need of the hour. I mean, I don't know how long this waves of millennials will continue, but at least for the foreseeable future, it does look.
Even not only homes, workspaces, you know, co-working spaces have become the new thing. I mean, people all over the world are looking for that.
Yeah, wanting a, you know, a small office, and which you can't manage at home, and where you would like, you know, a separate home, a separate single office. So clearly something that is the need of the hour. But let's see how it's an interesting experiment, at least in India, first of its kind. Well, with that, let's move over to another expert who has joined us. Sanjeev Bhasin of IIFL is with us. Good morning, Sanjeev. I think you may have missed the conversation we had with Lemon Tree. We were speaking to them about their JV with Warburg Pincus, and what they are planning to launch are small accommodations for young people. I mean, they're talking large numbers, you know, 100,000. It's a 3,000 crore venture with their own stake being about 30% and 3,000 crore over a period. In any case, have you looked at this stock and this idea itself?
Yeah, good morning. So, Lata, it could be a very, very good theme for the next year and beyond. And, you know, you've seen that's going to be the need of the hour, given the transit of young professionals all over the country. And you need something like this. You know, you had those bed and breakfast homes which are catching trend as rentals, you know, go skyrocket and so on. So it will be a very good theme. I have not had a very close look at the numbers, so we continue to think average room rates are going to rise. For us, Indian Hotel has been a huge outperformer. We continue to have an overweight on that. We think that could hit 175, 180 in 2019.
Okay. Well, Sanjeev, hi, good morning and Happy New Year to you in advance. I know you've been sort of building your, you know, shopping basket for 2019. So tell us, what does it look like? I mean, you've got a lot of your calls right this year, so congratulations on that. But what do you think 2019 will look like in terms of the leaders?
Yeah, Sonia, same to you, the team at CNBC and Lata, of course. We think 2019 will be a very pleasant year for equities. And, this last tranche of volatility has definitely set the apple cart. So we think that India is going to be an outperformer. And why do we have to keep pinching ourselves when we outperform? I think yields, rupee, macros on oil and others are only going to add to the kitty. Earnings are going to be a surprise upside from most people's estimates, and we think the consumption basket is looking very strong. Clear indicators are that for the first time manufacturing stocks, L&T, Cummins, Siemens are hitting new 3-month, 4-month, 6-month highs, which is evident that manufacturing is in place. So if I said for 5 large cap stocks, it would be ITC, Eicher Motor, L&T, Axis Bank and Hindalco. Okay. All 5 in different spaces, but all which can outbeat the index. Okay. And on mid caps, Sonia, if I could suggest 3-4 good names, they would be CG Power, NBCC, MGL and our dark horse in the CV component, that is Ashok Leyland. We think 103, 104 on Ashok Leyland is giving you a perfect opportune time, and we should do extremely well in the second half of 2019.
Okay, I don't know whether you're playing Santa or, a bunch of New Year gifts that you're showering. Sanjeev, do stay on. Speaking of New Year, we have actually something else for you. This is a global outlook that we have got, what you call Global 2019 Playbook. From Brexit to North Korea, 2018 was peppered with a plethora of geopolitical shocking events for investors to track. CNBC's Wilfred Frost looks at the big global themes that could shake the markets in the coming year. Listen in, it's interesting.
2018 has been a tumultuous year for geopolitics, and 2019 has plenty of challenges to overcome too. First, the China trade war continues. After achieving small improvements in trade terms with South Korea, Canada and Mexico, investors are wondering whether President Trump will end up settling for some minor adjustments with China by early 2019, or whether he fundamentally wants to shift the balance of future economic power, in which case escalating tensions should be expected. This question will also have large implications for the possibility of another summit with North Korean leader Kim Jong-un. Second, turmoil in the Middle East. Will Crown Prince Mohammed bin Salman continue to tighten his grip on power in Saudi Arabia and continue to get support from President Trump despite the murder of journalist Jamal Khashoggi? And finally, Brexit. Deal or no deal? With the 29th of March departure date fast approaching, will Theresa May get her deal through Parliament, leading to an orderly departure, or will the UK crash out of the EU with no deal? And risks elsewhere in Europe remain elevated too. French President Emmanuel Macron's approval ratings are below 20%, while disputes between Brussels and Italy's populist government rumble on. We'll get a test of the temperature of populism in Europe with May's European parliamentary election.